Today's topic is taken from our A202 workbook, pages 2 through 8. So if you have the A202 workbook, a current version or recent version of that, you may want to turn to those pages at the very beginning. That is what I'm using as the printed material for today's webinar event. If you don't have the workbooks, you can, of course, purchase those from the store, Church Windows store, our workbook pages, or workbook page there. They're often very helpful, and we do try to keep the webinars following along with those as much as humanly possible. So let's go ahead and get started. So if we turn to page 2 on our workbooks there, it talks about, we're here to talk about accounting other transactions or advanced transactions in this case. 2 transaction types essentially here today, folks. Transfer transactions and journal entry transactions. Those are the 2 things we're spending time talking about today. Okay? So page 2 talks about transfers, and how we get to transfers is we click under transactions in the top left, and then right across the top center, we see the option right here with the 2 arrows that says, pointing at 2 piles of money, called transfers. Transfer, right up here. Okay? So if I get rid of my drawing and click on the transfer option, it opens up our enter transfer screen as the screenshot displays on page 2 there of our workbook. The little star in the box says from account to account. So the from account, if we notice here on the left, let me get out my highlighter again. So from account over here on the left, and the to account here on the right. So as the box and the star says, from account equals the account from which the money is being taken. The to account is the money to which the balance or the money is going to. Okay? So you choose the date just like you do any other transaction. Okay? So I'm skipping over the very first paragraph up there on the top that it says this function is used to send money from one account to another of a like nature. So transfers, folks, always involves accounts of the same type. Asset to asset, liability to liability, fund to fund, income to income, or expense to expense. Always. Okay? So whatever you choose as the from account type, whatever account type that may be, you're forced to choose, the to account is always going to be an account of the same type. Okay? If you want to choose or post balances between unlike accounts, then you're looking at having to post something like a journal entry. Okay? Depends on what accounts you're wanting to affect. But journal entry essentially allows you to choose any accounts of any kind. Okay? We're going to come to journal entries momentarily. So just like with any other transaction, we're going to choose our date occurred of the transaction, so we're going to forward date that, advance date that to, say, the 24th. So it's always the date that you want it to affect your accounts and your reports. The from account, so if we click the down arrow under from account, we see all of our vendors. Again, they're categorized as liabilities. So as we scroll down, we get through our vendors. We eventually get into our asset accounts. And then we move into our liabilities, and ultimately you're into your fund balances, then your income, and your expense accounts, as the case may be. Okay? So in this case, we're saying that we're wanting to be able to move a balance, say, from our income account of general tithes and offerings. If I could type today. So here's our general tithes and offerings income account. Notice now when I click the down arrow in the to account, having selected that from account, I'm forced to choose another income account, a 400 account. Notice I scroll through the entire list. I can't choose anything else from income. That's what transfers does, folks, is always like accounts. In this case, 4 to 4. So we're going to say we posted it to general tithes and offerings income by mistake, and it should have gone into loose offering income, okay? So then once we've chosen that, then we would enter the amount. Granted, I suppose I wouldn't predate that. That would be a back date. So I would change that date on that transaction maybe to a Sunday date where that was a problem. So then I enter the amount, and then I can enter any transaction comments that I want. When I'm doing an income transfer, in this case, no payment method is required, and therefore no check or reference number is not optional. I can enter comments, then I click Done, Add to Batch. Okay. Okay. So just again, a simple transfer transaction, a transaction where a transfer may be necessary or warranted. I could do a journal entry and post the same transaction between the income accounts the same way. It would still move the money. It's just a different transaction type. Okay. So another example of another transfer, well, now this is where things become important, is where the type of transaction does become important, is when, say, we want to move money between, say, our asset accounts. Okay, this is a very common transaction that I walk through on my support calls with folks. So if I choose my, say, Huntington Bank checking account 100, now we're into our assets. Again, our from account forces me to choose another asset. So we're going to choose our savings account, say, for example. So Fifth Third Savings, I can enter the amount of the transfer. We're going to transfer $500. Now notice that my payment method is required to select. So I do have that. That's live. Pretty much all of my payment methods are there to choose. Manual check, computer check, cash, EFT. FYI, folks, again, you don't, when you're transferring money between asset accounts, you don't need to enter a bill and pay a bill in order to be able to produce a check. So if I choose computer check here, just like when I do enter and pay my bills, I can choose computer check. The check number is not entered here. I can enter comments if I wish and then click Done, Add to Batch. But when I post this and I go back to print checks at my main home screen at accounting, it'll show my check waiting to print to move take the money out of my Huntington Bank checking and move it and deposit it into my Fifth Third Savings. If that was being moved electronically, I would choose EFT if I was going online or doing that or calling it in, okay? We're going to leave it as computer check, and again, same thing, click Done, Add to Batch. Okay, so now we're moving on to page 4 of our workbook here. So it's very important what we're covering here on page 4. As it points out, a word of caution, okay? Folks, I've been doing this a long time. I can't stress this enough. Every chart of accounts is different, okay? We're dealing with and working with a fund accounting system in Church Windows. And what this section is basically pointing to is when you're moving money on one side of your balance sheet, so just as we've done here on our asset transfer between our, say, general checking and our Fifth Third Savings account, you have to constantly ask yourself the question about that. If I'm moving money between my bank accounts, does that mean then I also need to move money between my funds? Okay? So an example of this might be that if my my Huntington Bank checking account money is representative of, say, my general operating fund monies, that's where my general fund monies are stored, and my Fifth Third Savings, say, store exclusively my building fund monies, okay, again, assets are just accounts where our money is stored, then I would have to post another transfer between fund to fund. So in this case, I would choose my general operating fund balance 300 account, then I would choose my building fund. If I could type again today, folks, I apologize. Building fund. So there's my building fund 300. Again, I can't stress enough that the from accounts determine the to account. So notice here my 300 accounts are automatically my other funds. So same thing, assuming that, again, the assets and the funds are representative of one another, I would do another $500 here to move the money from my general fund into my building fund, again, entering any desired comments and clicking Done, Add to Batch. Okay, so at the bottom of page 4, now again, this is all depending on how your chart of accounts is designed and constructed. If your assets or your funds don't have a one-to-one ratio of assets to funds, then maybe an asset transfer is all you need. Maybe there is no fund transfer required. It depends on how your chart of accounts is constructed. Every chart of accounts is different. Sometimes a transfer between funds may be warranted. Sometimes it won't. It all depends on your chart of accounts, okay? You have to know where your money is. So before we click on post, I'm a big fan of clicking on this button in the upper right that says show running balance. What this window does, folks, is it allows us to examine the effect of the transaction will have on our accounts before we post anything. So it shows me my Fifth Third savings. It's being increased by 500. My Huntington Bank checking is lowered by 500. My building fund balance is going up by 500. My general fund is going down. Okay? And then if I go further down, it would show my journal or my transfer between my general tithes and offerings income and my loose offering. Okay? So again, use the show running balance window. It's on virtually all of our transaction screens. Enter bills, pay bills, enter income, journal entries, clearly transfers, okay? This show running balance window minimizes mistakes, allows you to find those before you post them so you don't have to go into browse, correct them, and fix the problems. Everything looks good on show running balance. We're going to go ahead and click post. All right. So again, it's asking me, do I want to print a list of those, a report of those transfer transactions? I'm going to click no. Page 5 talks about our journal entry transaction, okay? Transfers, folks, is a really, really powerful screen, okay? So, again, as long as it's like accounts, transfers will work, okay? Let's go up to transactions in the top left, other, and we're going to choose journal entry transaction. Now we're talking about page 5 for the rest of our event here. We've only got about 7 minutes. I guess I better get moving here. So transactions, other, journal entry. Journal entry transaction is designed to move money between unlike or any accounts. They can be like or unlike. It doesn't matter. Okay? Basically, as long as it's a balanced entry of a balanced debit and credit, it's going to permit you to do it. Okay? So the first thing that it prompts up and asks us to do is to choose a date. So we're going to leave it as today's date. That's why I was flashing the red dot at us. So now I can enter transaction comments if I wish. But I really stress that you may want to make a copy of this page 5, cut out that little section of the middle section there that says the effects of debits and credits. Because effects of debits and credits in a double entry accounting system, folks, really, really throws folks for a loop. So, we debit an asset or debit an expense, it increases its balance. And when a credit to those, an asset and an expense decreases its balance. And for the other liabilities, funds, income, it's the opposite. But it's counterintuitive to a lot of folks that a debit increases an account, whether it's an expense or an asset. Okay, but since we're dealing with a fund accounting system, a double entry fund accounting system, we've got to have, this is how it simply is. For folks who are familiar with this, this is how this works, and it works, okay? But again, you may want to cut that out, print that, tape that to the side of your monitor just to have it so you know what debits and credits do to all of your account types, okay? An example of our journal entry would be, we've received a gift of $1,000 in order to be able to, from a fundraising event to purchase new noodle making equipment, okay? We have noodle making events throughout the course of the year, and we now need to make a new purchase for noodle making equipment. We received money in a fundraiser back earlier in the year. The treasurer's now instructed us that they want us to move that $1,000 expense or income amount from the income account to the expense account that paid for that new noodle making machine. And so the only way we can do that is through a journal entry, okay? So if I enter my date of my transaction, I can enter comments if I wish, again, under my now again, notice there's no from and to here. This is all about debits and credits, okay? So because I'm taking the money from my income account, I'm going to be choosing the 400 account now, so my fundraising income. I'm going to debit that to take that balance from that, okay? And then we're going to click the plus sign over here to the right or tab over, and then we're going to choose there's our fundraising income, okay? And then the other count is going to be our 520, 100, our building fund expense. So that's where we originally spent that money when we bought the new noodle making machine. Okay, so I choose my building fund expense. I'm going to credit that. Okay, so I put in the same $1,000, enter any desired comments that I'm wanting, and then when I'm ready, I'm going to click Done, Add to Batch. Folks, I can add as many income or any accounts that I want to this transaction as long as my debit and credit totals right here in the middle are balanced, and we see total debits, total credits. Then it's going to permit me to post that. Okay? It'll bark at us if it's unbalanced. So if I try to make this 990 and I try to click Done, Add to Batch, it's going to yell at me. Okay? So I've got to make sure that my journal entries are balanced. So I go back up here, I enter my $1,000, click Done, Add to Batch. And again, big fan of the Show Running Balance. Click Show Running Balance here in the upper right. Now notice our fundraising income started with a current balance of 1,000. We took out 1,000. The transaction effect is 0. Okay? It's reducing that income account. Okay? At the same time, it's reducing the balance of my expense because, again, a credit to an expense decreases its balance. Okay? I'm not charging something to the expense. I'm increasing it, or I'm decreasing it through a credit. Typically, expenses are debited, not credited. So this is showing that the $1,000 that we expensed against the building fund expense account are now being offset through the income credit. Okay? So my expense is now only actually $1,345.67. That's doing exactly what I want. I'm going to go ahead and click Post for that. Okay? Well, I'm not going to click Post on that. Give me a second here. Okay. When I click Done, Add to the Batch, if I want to, I can highlight it. I can expand it and see the accounts. Or if I go, oops, I didn't want to do that, I can just double click on it. It moves it back up to the top, takes it out of my Show Running Balance window, and moves it back up to the top, allowing me then to make further edits or changes. But once I've done Add to Batch, and again, I verified through my Show Running Balance that it's correct, then I'm going to go ahead and click Post on my transaction. Okay? Journal entries, folks, are done for making corrections a lot. Okay? I could do a transfer. I could do a journal entry. The main difference between our transfer transaction and our journal entry is that the transfer transaction allows me to choose a payment method when posting transactions between my asset accounts. Okay? The journal entry has no payment method on the screen here whatsoever. So when I'm done with that, I would simply click Post, and that'll post my transaction. Okay? All right. So it's gone. We're about 12:50, folks. I'm going to end things there.